Hello everybody, hello, welcome back to another new video. So let me just make this one thing clear to you that this video is for only for beginners who are new to the markets or some really intermediate players who don't know much about technical analysis. So this video is going to cover only the basics of the technical analysis, and yeah, so let's begin. So if you are a complete beginner, whenever you see a chart, you might find it very complicated or very difficult to read. Like you wouldn't able to understand what this chart is showing to you, but by the end of this video you will. So let's start with the first topic, candles. So there are two types of candles, the bearish candle and a bullish candle. So this one is a bullish candle, this one is a bearish candle. The reason this is called bullish candle is because this candles open here and it closes here, means price is closed above, the price is increasing. This indicates the price is going upside. The little tiny line you see right here is called a wick. This indicates that when the price opens, when this candle opens, the market makes a low till here, but the market didn't able to sustain below and the market shoot up. This was the high this candle make and the price closes here. Same in the bearish candle, the markets open here. This was the high this candle make, this was the low this candle make, and here the price closes. So let me just show in the trading view as well. As you can see, this candle open here, this was the high this candle make, and this was the low this candle make, and the closing price was here. So now the next candle opens here, this was the low this candle make, this green candle, and this was the what we call it, this was the closing. So here's the next week opening. So this was a little bit capped down. So let me just show you another example. Here the candle opens, this was the high this candle make, this was the low, another candle opening, this was the high, this was the low, and this was the closing. So now you can understand how these candle works. So let's move on to another topic, market trends. So market moves in three trends. There are usually three type of trends: the uptrend, the downtrend, and a range bound markets. So in uptrend, the market moves upside, like higher high, higher low, higher high, higher low, higher high, higher low. In a downtrend, the market moves lower low, lower high, lower low, lower high, lower low, lower high, lower low, and you can see, understand. So here the price is going upside, here's the price going downside. And the third market is that usually most people avoid to trade, not only beginners but everybody, most of the players. So these are range bound markets. The reason people avoid them is because here the market isn't going in one direction. So let's see, in an uptrend market we look for buying opportunities. So this high low is a good buying opportunity, this high low is another good buying opportunity, this high low is another good buying opportunity. In a downtrend we look for shorting opportunity. This lower high is a good shorting opportunity, this another one, and here's another one. But in a range bound market don't have a clear direction, so it's completely foolish to trade these range bound markets because market don't have any direction, and as a traders we need direction to trade. So this is how a uptrend look in the real charts: higher high, higher low, higher high, higher low, higher high, higher low. And this is how a downtrend look in the charts: lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, as you can see. So let's move to another topic. This is called the trend change or market shift. So whenever markets make a higher high, it also gives us a break of structure. So this was the previous high. When markets break it, it gave us a break of structure. Here's another break of structure, here's another break of structure. But this time, as you can see, market failed to give us another break of structure, and this time instead of giving us a break of structure, the market shifted the trend. So this time it broke the swing low and closed below. So this is a market shift, or you can say trend change, market shift, or change of character, change of structure. So after this market shift, the market started to giving us break of structure, but this time on the downside. So you can see break of structure in the downside, break of structure in the downside, break of structure in the downside. So this is called a trend shift. So we shifted from uptrend to downtrend, and this was the area where the trend shifts. This is how it looks in the real markets: a break of structure, break of structure, break of structure, break of structure. But this time market failed to give us another bullish break of structure on the upside, but gave us on the downside. So this is called a market shift. So here's break of structure in the downside, another break of structure in the downside, another break of structure in the downside. So market shifted from uptrend to downtrend by giving this market shift. So now let's go to the last and final topic, which is market cycles or market phases. So market usually moves in 4 phases: the accumulation, trend, distribution, and pullback. So firstly, market accumulates the price or the money, and after accumulation, we get a trend. So this was an uptrend. After the trend finished, we again start to consolidate, and this is known as a distribution phase. After this distribution phase, we have a pullback phase. So this time market started to going downside in an discount area to make another what do we call that, another trend. So accumulation, trend, distribution, pullback, and this is again accumulation phase, and we'll get another trend. And yeah, that's how it's going to work. The reason this is not a market shift is because the thing you see right here, the market, we'll consider this as a market shift if the markets broke below this, because we are not seeing on the higher time frame. So yeah, in a complete uptrend market, this is accumulation, trend, distribution, pullback, and again this is accumulation, and we'll get another trend, another distribution, and another pullback. In an uptrend market, this cycles keep on repeating itself, and in the bearish markets, there's this complete opposite of that. So if you just understand this, now you know more about financial markets, especially technical analysis, than 99% of the world. And the only thing you can do to make your skills better is to just go on the charts, go on TradingView, and train your eyes on these topics. I'll also give you the link to this Google Doc, so that it can help you to understand these markets. So yeah, that's it for the video, and I'll see you next time. Inshallah. Bye bye.